I'm Matt Bichard with REIT.com here in La Quinta, California for REITWise 2013, NAREIT's Law, Accounting, and Finance Conference. Joining me today is Mark Van Deusen, partner with Hunton Williams. Mark, thanks so much for joining us.
My pleasure.
Here at REITWise, you were on a panel that focused on mortgage REITs, and you spoke about excess mortgage servicing rights. What are excess mortgage servicing rights, and why are REITs looking at investing in those assets?
Excess mortgage servicing rights are a portion of the servicing rights that's created when a originator or a seller of loans securitizes those loans and sells them. They will often retain the obligation to service those loans, and in return they receive a fee that's calculated based on the outstanding principal balance. And that fee that they're entitled to, it's called the mortgage servicing rights, that has two components. One, it has a component that is the compensation for actually providing the services, and then it has a second component that is an amount in excess of that, what we call the excess MSR. And so it's that excess MSR, it's the portion that really is an interest in the underlying interest income from the mortgage loans that have been securitized that we refer to as the excess MSR. And the reason why we're talking about it are twofold. One, a lot of banks are looking to sell the excess MSRs that they hold. They have, under Basel III, the amount of Tier 1 capital that counts as an excess MSR, that they can count for excess MSRs, is 10% now. It's lower than it used to be. So there are people looking to sell the excess MSRs. Also, the IRS has just issued a private letter ruling indicating that excess MSRs will be treated as good assets producing good income for the REIT income and asset tests. And that private letter ruling has really clarified the law and made a lot of folks look at acquiring this new type of asset inside of a REIT.
And during the Great Financial Crisis, almost all mortgage securitization transactions were conducted by the agencies. But some mortgage REITs have recently executed a limited number of securitizations. Do you think mortgage REITs are going to get more active in this area?
I do. I think, as you indicated, during the financial crisis, it was all about the agencies. But in the residential side, Redwood has done some securitization of jumbo loans, and you've also seen in the commercial side some securitizations with commercial loans. And I think, when I'm talking to potential new clients that are looking at starting mortgage REITs, one of the asset class they always talk about doing is jumbo loans with potentially securitizing those. So I think over time that is going to come back into play. One of the interesting things we'll see how it works out for REITs is that one of the structures that a REITs can use to securitize loans on a very efficient basis produces something that's called excess inclusion income, which is a bad sort of income for a REIT's investors. And the Russell Investments, which produces the Russell indexes, has indicated that they're not going to allow any REIT that has excess inclusion income into their indexes. So there's going to be some judgment calls for some REITs as to whether they try to use a securitization structure that provides the best execution for them, or do they want to stay within the Russell Index?
And last question, we're about a quarter of the way through 2013. What do you think is going to be the dominant trend in the REIT industry this year?
Well, I think a lot of it is going to depend on what comes out of Washington. First of all, what happens with interest rates? Do we continue to have a low interest rate environment that has allowed so many REITs to be able to issue stock because of the search for yield that's out there? And then second, I think it's what's going to happen out of Washington. There is a lot of talk about tax reform, and REITs can get lost in the mix of that unless NAREIT is out there diligently making sure that their interests are taken care of, which they are. So we'll see how it all shakes out, but I do think it's all about Washington for a little bit.
Mark, thank you so much for joining us.
My pleasure.
For more on this and other REIT news and analysis, be sure to visit REIT.com.